How are we doing, guys? Welcome back to another Isaac Finance video. So I'm going to be stepping up the quality and the videos a lot more this year. I'm going to be aiming for 2 weekly uploads. I'm going to be aiming to make the quality a lot better, give actionable setups, give actionable advice, and really make this a place of learning and knowledge expansion within the field of crypto, and then general finance too. Okay, so what we're going to start with today is we're going to start looking at the macro and then going to the technicals, and we're going to be looking at a few trade steps we can be taking based on the information we're going to be given and what we can see. So I'm going to try and keep this very succinct, very clear, and not waste time. Okay. So I'm going to be using the slides from our monthly uploads that I do with Ainsley Crypto. You can check them out. The full video I'll link it in the description below, but we'll go over the charts in this one specifically, and then we'll go to TradingView, take a look at setups locally, because this will cover the macro setups and then obviously your high time frame setups on Bitcoin. And we can go down the local setups, those more scalpy trades. For Bitcoin in the local time frames, the 5 minute, or not 5 minute, the hourly sort of time frames. So let's just start with that now. Okay. So if you want to check them out, you can check in the description below. Macroeconomic, Bitcoin market, and then technical analysis. So that's what we'll be going over. So the global macro cycle indicator. So this is where we are right now. We're in the mid cycle. So this means we do have a lot more push to the upside, potential push to the upside, which means we're not really looking for tops just yet until we're above the 50 line. So once we're above the 50 line, that's when we start to be looking for potential tops. This cycle has been rather tricky, where you can see there's been a lot of data revisions, and it's been a very sloppy cycle in terms of the way the data has presented itself. Hasn't just been a very cyclical sine wave, but more so a dragged out trend high, I guess you could say. ISM, 3-month leading indicator, is tracking up now. This looks like a breakout. So far quite bullish. So we'll have to keep track of that. When it's above 50, it means we're into the expansion phase, which is positive growth essentially, which means things are heating up, which is good. It's what you want to see. Obviously, you can see that. So when the cycle came in for Bitcoin, the cycle low was in November 2022, which is around here. So we have only really seen an ISM tracking on a horizontal basis rather than vertically climbing, which we're starting to do now. So let's hope we keep that up. Inflation is rather sideways right now. So we'll see what happens with that. It could tick up if we have a very heated environment, but we'll have to see. There's a lot of different varying opinions on where inflation is going to go and the effects of tariffs on that. So I might cover a video on that later on. I will have to study it a bit more to do a good depth report on that one. But today we're going to be looking at the Bitcoin cycles. Global liquidity is one of the metrics that we look at, which is a key metric that essentially shows how much money is in the system, and that money then correlates to world wealth and asset prices. And you can see that with the gold and housing as your basis here, which is the black line. And you can see the correlation rate's just too strong to ignore. So sensitivity to global liquidity, obviously you can see the highest one to crypto. So obviously you have to be having a crypto portfolio. You could obviously keep it balanced with a bit of gold or silver. But as you can see, the ASX, the Australian index, is nonsense. Look at this. Look at the multiple in terms of your money. It's trash. Your SPX is okay. Your Nasdaq's okay. Commodities okay. But obviously I'm from Australia, so we look at the ASX. A lot of people do that, and it's in their CommBank application they can use. But you're barely even beating inflation with those returns. So it's a bit sad. So an appropriate allocation of capital is very important if you're looking to grow your wealth at a pace that outpaces inflation rates. So yeah, obviously a portfolio denominated in Bitcoin is better. As you can see, it's the highest performing so far without all the assets. You can see last 18 months, it's done a multiple of 5x on a basis of 10% increase in global liquidity. So let's say global liquidity as a ballpark number was $1 trillion. 10% of that is 100 billion. Okay, so that's what it means by 10%, and every 100 billion that correlates to a increase of 5x in Bitcoin. Now, I'm not saying 100 billion is the number, but I'm just saying how much as a nominal value, what you could visualize it as essentially. Boom and bust cycles since 1970, you can see that here. Every peak and trough is met with a narrative that's appended to it. The last one we had was the US regional banking crisis. That was the silver bank stuff that happened. We had the COVID boom here, the US repo crisis, global housing market boom, dot-com bubble, etc. There's always going to be a narrative appended to a reversal in a market, because that's the way the debt cycles generally work, and that's the way the liquidity cycles work. So there we go. Global liquidity index, we are tracking up now. It's been quite a tumultuous time, almost akin to something like this, rather than the COVID one was very much just straight like that. So it was very good. Anyway, onwards to the heat map. You can see we have, everything is in our expanding phase, which is very, very bullish, which is very good. A few countries that have to sort of give way. We got ones here, ones here. This is gives you a visualization of what countries are world central bank liquidity, letting money in the system essentially. We have the rate of change here. So obviously when we will come to that top, we were all looking at that and we were seeing that is starting to reverse down, which meaning doesn't necessarily mean the global liquidity is decreasing, but it means it could be stagnating. But obviously at that point it was decreasing. And you can see it's just the rate of change. So that's how you could visualize that, but rather than a nominal value increase. Yeah, so we obviously went down a bit here and now we're ticking back up, which is good. And those are those alligator jaws which are chomping together, which is good. It means there's not much of a divergence anymore. So obviously we led here and Bitcoin had an appropriate pump up. So now we're obviously down here, tracking sideways, and now we're together. So we're in tangent with the levels. Now, market analysis, MVRV, where are we? We are in a very good situation for a final push up in my eyes. Everything looks primed for it. We'll go over where we are going to be looking for that in a second. So we can see here, a ballpark number would be 5, which would put us around maybe 180K, I think. Around those regions, right? That's very, very nice. Realized price, you can go research that one. I've done a bunch of videos on it before. Essentially tells you when the market's getting euphoric, when to exit, when to enter. Fear and greed. We are entering fear. That is typically very good for buying opportunities if we're going to be seeing a push higher, which I do expect to happen, whether it is this daily cycle or the next daily cycle. A push is expected. We could have a situation where it's rather like this, where you have a fear and then you pump up, fear again, pump up and fear, and then the final one, and obviously we climb up from there. Definitely in the cards. We'll have to see how it turns out. But nonetheless, fear is a good time to be getting in. You should have been getting in before when it's 2022, but obviously the time is not here. That's gone. So, yep. FOMO Finder. So where are we now? We have, I want to see a purple going into the weekly cycle low, but we might not get a purple, and that is what we have to get. What we get, it might be a time-based cycle, that's what it is. So looking good in my eyes. RSI looking more like this cycle here from what I can see. People will be looking at that and saying the top's in, but I don't think the top's in based off what I'm seeing here and the other metrics that we're looking at. So you can't be looking at this one side and making a conclusion based off that. Onwards to the Google Trends. So Google Trends is projecting that we have loss of interest from retail, which is true. Same thing with this one. And they'll come back when price reaches all-time highs because that's what they do. Because no one actually sticks around and no one has the attention spans to keep track of things these days. So that's unfortunate, but it means people who do will be the one who reap the benefits. Active addresses. So we have obviously had a bottom come in for that, and now we're seeing a subsequent push up, probably potentially making a higher low, which is very bullish, building an uptrend, which is going to be very nice. Cool. Retail and large investor holdings. So we can see different charts show different things. This one's showing that retail is exiting and large investors are getting in. So different on-chain stuff is quite convoluted. I've seen other charts which are the opposite of this, but we'll have to I might do an in-depth video on that one, talking about what's actually going on, because I'm not entirely sure how that works out. Anyway, ISM, you can see that tracks here. So, it's looking good. It's probably nothing's going to track exactly the same, but it's looking good as a general consensus. Truflation and bond yields. So truflation is our inflation metric, which you can use, which tends to be more accurate than what the government projects. And that's a 10-year bond yield. Here we have the US dollar. So if the US dollar comes down, it's liquidity positive. So we'll see what happens with that. It might not, but it might be conducive. We've also had a rising US dollar and the Bitcoin is doing pretty well. So that's that. little fun fact there. You can read that one. Bitcoin analysis, where we are in the cycle. So we are in the green section here, which is typically where tops start to come in. Okay, so we have to be getting ready for a top to come in. We could be seeing a very large euphoric push up soon, which I do expect to happen. Obviously, your percentage increases are a lot less than previous cycles, but a nominal increase is going to be there nonetheless. Now, as we go through this time period, I will have to start flipping bias immensely and just be like, okay, the top's probably going to be in based off what we're seeing, but right now we're not seeing that, so we have to keep sticking to our plan. Weekly cycle low, this is very important. Keep your eyes on this time frame. We should be having a weekly cycle low come in around this time frame. Every time we've had a weekly cycle low, it's pumped, okay? I want to drill this into your head. Every time we've had a weekly cycle low, we've pumped. Now, where are we? Stochastic RSI is oversold. We are entering a phase where we should find a bottom on a technical basis. So how do you make a conducive plan out of that? Well, a spot allocation, if you're already in from the lows, adding more spot could potentially be a good move here. Not giving any financial advice. Do not take anything from what I say. I'm just giving you the data and the facts and what things are saying. The sine wave represents the time frames. Okay, so what do we see? Every time we have an arrow is where a bottom comes in. It's an approximate time frame. So we should be seeing a weekly cycle low come in the next few weeks or this week, really. Now, we'll go into where the level will be that it probably will bottom, okay? Now, does this mean we're going to find 180k Bitcoin within the next few months? Potentially. But I think it will offer support nonetheless as we go through the next cycle. And then from there, we'll have to reevaluate what happens. Where it is the end of this month. So we're the 20th of February. 28th of February is where it's scheduled to happen. Now, what we could see typically is a capitulation going into the weekly cycle low. We don't usually see it just, trade sideways, then go up. However, it could very well do that. And if it does that, you'll be left offside. So what would be the smart thing to do? DCA, get in and do a triangle formation. Get in smaller now, and if it starts dipping lower, get in heavier. If we start shooting up from now, well then obviously you might have to reevaluate that and clip in. However, based off what I'm seeing I've already allocated some spot positions, and I think it is a good time to start considering getting in. And if we see the undercut of these lows here going into that, then that's going to be very good setup. Everyone's going to be super bearish. We're going to see sentiment absolutely rinse out for the next push higher. And then we'll have to reevaluate what we're looking at there and all that stuff. By the way, if you want to check out a really good analyst, check out Camel Finance. He does an amazing videos on these updates and very good stuff. Now, volume profile. What are we seeing on a volume profile viewpoint? We are currently in the middle of this volume range. Balancing off the POC, we came for the undercut a few days ago. We've now since pushed back up here. I did take a spot trade off that one because there was a few good levels, and I also saw a lot of shorts enter the market and a reversal, which was obviously putting the cards for a local short squeeze, which we saw, which is a 2% move or something like that. And those percentage moves add up if you can conglomerate that over a period of time. What we could very well see is a undercut at the value area low going into the cycle low, take out these stops. But until we break fully from here, we could just have a timing-based cycle low, which means we range and then pump up from here. So we'll have to see how that happens. That's why I said there's two situations and two things to do. Or you believe the top's in and everything is done. So sell now so that you make the call. Volume, yeah, we already got, this is outdated already. As we can see, the large short liquidations up are higher. So 99K, that's going to cause a giant short squeeze if we start hitting those levels. $102 billion. This is just a Binance exchange. We've got shorts to the downside too. That's why I said be careful, because we could have a short squeeze. No, not short squeeze. We could have a push down, which could wipe out traders, which is good because leverage gets out of the market, enabling the next push up. Pi cycle, forget about it. Liquidity, our levels down the bottom too. Like I said, boom, that's that. Now, what I want to go over now is the Bitcoin chart right now. So what are we looking at? Let's look at potential trades and what I was looking at too. So in the last video, I made an update talking about levels to be taking a long position. That was off the Fibonacci level. So we can see here, there was a large support that was found here. Boom, 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 boom. I did take a few trades off that one. We have since come down, taken out the low under here, shot up, as you can see there. So this is people would just call this a swing low. We just took it, came up, And the reason I took a trade based off that was because we had strong reversal, tons of shorts trapped in the bottom, which means if short squeeze is going to happen, that, you know, that was a 2% move, okay? What are we looking at locally right now that would be interesting and trade setup wise what we could do? So obviously we're favoring long positions, okay? So if you're going to long here, you're longing on the valid point of control, which is, you know, it's fine, but it'd have to be a spot position. If you're looking for a leverage trade, levels to be looking, I say levels to be looking at because I don't mean you just take trades based off it. You obviously have to look at what is your order flow doing and etc. One trade level we could be looking at is down here. We've already tapped it, but we could definitely be taking it again. The other one is down here. So really, these are the only sound trade setups I see. We have a few levels down here, but until we get there, let's not reevaluate that too far. So long positions, potential sweep of these lows again, push up, or the next one I'll be looking at is here, because I got in here. So, you know, that's, yeah, that's that. Stop loss, well, break even, spot position anyway. So I'm planning to just hold my spot, even if it dips down. I will then buy more down here, average price around here. Expect the cycle low to come out of that. Yeah, so cycle low selling, like we could have something like this, push up. We have to be ready for all things, okay? If we see a complete breakdown, we're all screwed, okay? We're not screwed. I mean, we obviously got in the bottom, but people who are just allocating now are screwed because they're going to be trapped up here. Now, it's different if you got in to Bitcoin down here and we tank down here. That's a different story. You are still up 3x, okay? So you shouldn't be complaining up being 3x. So what does it look like to me? It looks like very bullish. Here's a level, here's a level. Do you want to be taking a short trade? I don't want to be taking a short trade, but if you were to do a short trade, resistance would be found right above here in my eyes. Swing high, value area high, golden zone, boom, you got your levels. So 102, 103, 9290, 900, and 89k, 88k. So there are your levels, guys. I hope you enjoyed this video. I hope it was very succinct. Yeah, we know what to expect. Rewatch this video if you want to rewatch it. I'll catch you guys later in the next video.